Thanks for joining us. I'm Marlon Bowling with another look at our ag commodity trade. And we're going to be going to Chicago here in just a moment. I did want to review some of these numbers, and we have a lot of data coming out from USDA on Friday. We have early trade guesses here for some of these numbers, including the very important ending stocks numbers. And here's a closer look at what the trade expects to see on our U.S. ending stocks. So as we zoom in here, this is a look at our ending stocks for the 2017 and 2018 marketing year, which is coming to a close. By the way, on corn and soybeans, the marketing year starts on September 1st. So we are just on the cusp, if you will, of starting the new crop marketing year for corn and soybeans. So the trade is looking for 2017 and 18 ending stocks on corn at 2.02 billion bushels, soybeans 461 million, and they're looking at the wheat to be about 1.1 billion bushels. Now for the 2018 and 2019 crop, in other words, the marketing year that's going to be starting here in about 3 weeks from now, they're looking for the corn to have ending stocks at 1.63 billion bushels, soybeans 641 million, and the wheat at 959 million. And then you have world ending stocks numbers as well, and here is what the trade is expecting to see. For the old crop corn, they're looking at 190.8 million tons, soybeans 95.8, wheat 273. And for the new crop, they're looking for corn to have about 152.2 million tons left over. Soybeans are looking for 99.3, and the wheat 255.6. So those are what the trade is looking for when the numbers come out at noon Eastern time on Friday, 11 o'clock Central time. Well, let's go to the trading floor and find out what the talk of the floor is right now. We'll visit with Scott Gecas of Longleaf Trading. There he is right there at the edge of the trading floor on the platform. All right, Scott, what are you hearing among the traders out there talking about the trade today on the grain?
Pretty much it's really going to be quiet for the next few days, just going into Friday's report. One thing I want to point out with the soybean market is, all the tariffs have been going back and forth. Everybody knew that it was going to be detrimental for U.S. farmers with the soybeans. Going into the fourth quarter, I was on here a few months ago saying that it doesn't matter what the tariffs are going to be. South America cannot support the need for soybeans, so everyone's going to have to go to U.S. soybeans in the last half of the year to, find their soybeans. That is confirmed with Argentina as well as Brazil buying U.S. soybeans lately. Now, there's rumored to be several different cargoes that are on its way to China already. So, the imports from China, they're only off about 3 to 4%, if that. That's really not that significant. So the tariffs have been priced in between the South American soybeans, between U.S. soybeans. They were trading around 270 over versus 60 cents over. But right now, you're starting to see that demand for U.S. soybeans come in pretty dramatically here in the next few weeks here.
Okay, let's look at our current prices here, Scott. On the corn and soybean trade right now, you have your September corn 3/4 higher at 371.5. It's kind of quieted down here since the early morning trade. December up a penny at 385.5. It's been fairly quiet basically all night long too. Soybean trade, let's take a look there where we have September now 5.5 higher at $9.75. Had a low of 8.88 earlier today. November now 5 3/4 higher at 9.11.5 per bushel. So that's rebounded about 13 cents off of its overnight low. In the wheat market, here in Chicago wheat, we have September 2 3/4 higher at 571, kind of in the middle of its trading range, but the lower half, I would say. Kansas City wheat, there you have September 5 1/4 higher. Its last trade is 584 3/4, and that's about a nickel off of its high and its low. Looking now at the Minneapolis wheat trade, we have September 6 higher at 633 3/4, and that's within a penny of its high of the day there. And if you look at the cotton, don't forget that December contract, and now it's back down lower by 7 points at 87.83 cents per pound. That thing's been on both sides of unchanged off and on all day long. We'll come back in a moment and take a look at our livestock trade with Scott Gecas when we come back. Scott Gecas rejoins us now. He's with Longleaf Trading, and he's at the edge of the trading floor in Chicago right now. We want to switch gears, talk about livestock here, Scott. So we have the cattle and hog trade having kind of a tough go getting any buying enthusiasm under them. Let's take a look at our current prices here, Scott. And I want to get your take on the market action that we are seeing today. We have the October live cattle in there at 110.47 per hundredweight. That would be down 45 cents. And December down 40 cents at 113.98 right now. Meanwhile, on the feeders really took it on the chin yesterday. They were over $3 lower in that one contract. Well, right now you have August up 25 at 150.10, but you do have September about 15 lower at 148.57. And then you have October down 42. The far out deferred months are over 70 cents lower there. And the lean hog trade this morning had triple-digit losses earlier. We have some still there. We have October down 176. We're trading at 48.22, and December down $1.24. Last trade there, 44.38. It actually got as low as 44.05. Almost took out $44 today. Still down there trolling around that area right now. So back to the cattle. We had a very soft start there. It looks like it's coming off of the lows of the day. What's the talk on the floor there this morning about the cattle market? What's driving it?
The cattle market in particular, I mean, it's one of the things that are sparking our interest is the big drought in Australia. It's one of the biggest droughts since 1980. That could spurge a little bit of a surge in exports for U.S. cattle. Right now we have the lowest long position since December. So, we've seen the cash trade around 114 yesterday. Slaughter continues to go up week on week versus year on year. So we're going to see how that's really going to play out, going into Friday's report as well.
That's interesting you say that. We just ran a story on that with the severe drought conditions in Australia. So fascinating stuff. And it does have a global impact, that's for sure. On this hog trade, we apparently have made new contract lows once again today, right?
Yeah, it's really, you're in an odd dynamic with the hog market because the chart on the technical basis is absolutely broken. We targeted that 65 level, blew through it. Now we're targeting that 55 level. We blew through that yesterday. Now we're hovering around that 55 level. The only thing that we're looking at on the hog market in particular is just on the technical side. You're hitting contract lows with very, very little volume, but you're also seeing, on record short positions. So we're expected to hear something positive come out of U.S. and Mexico with NAFTA, and it's rumored that it's going to happen by the end of August. If you see any positive news come out with that, you're going to see short covering, a big spike higher. I wouldn't be surprised if you see limit up for a few days.
Interesting stuff. Okay, now as we take a look at our product prices, you mentioned the fact that we had belly weakness yesterday. I wanted to bring up the pork carcass cutout values once again and look at those primal cuts. Here they are. Carcass values down 76 cents yesterday at 72.05. Now, we did have the loin and ham market a little higher yesterday. In fact, the hams came up over $2. But that belly market, as you mentioned, Scott, down 9.52 at 99.20 per hundredweight, well below that $100 mark. And we'll have to wait and see when we get our new update here in a little over an hour to see if they are rebounding on the midday update today. But that is a very important benchmark that may have given way yesterday. We'll watch it very closely. Thank you, Scott, for talking with us today. Appreciate it. We'll bring you back here real soon, okay?
Thanks again.
Scott Gecas of Longleaf Trading. He is located in Chicago.